Hello again. We'll be discussing in this video, reading the financial page. You've probably heard it said that knowledge is power. There's no place where that's truer than in investing. Knowledge is essential for successful investing. Investment success requires access to good information and careful assessment of that information. This video will discuss the sources that are readily available to you. If you use that information wisely, you have a better chance of realizing your goals. There are books on investing, but the financial information in newspapers, magazines, and online sources provide you the timeliest information and are an invaluable resource to you in choosing and assessing your investments. The goal of this video is to guide you in how to locate and digest the financial and business news that is readily available to you. There's no prior knowledge required to understand these videos. We will build your knowledge in a layer at a time to help you learn the terms and concepts of successful investing. We suggest you purchase a copy of The Wall Street Journal, the newspaper, for reference as you progress through this and other videos. You'll find financial and business news in newspapers, certain magazines, and online sources. The best source for financial news are daily newspapers such as the New York Times and the Wall Street Journal. Also, most big city daily newspapers have at least some coverage of financial and business news. An excellent source for international business and economic news is the Financial Times, which is published in Great Britain. It is difficult to find on US newsstands, but you can view it online easy enough. You can get a limited online subscription for free at ft.com. Sunday newspapers are a good source of business news. They often have better coverage in their Sunday paper than they provide during the week. Business magazines like The Economist and Business Week are good as well. However, they are published weekly, so it may appear stale news to you if you stay abreast with the daily business news. Still, they many times have more in-depth material of value than you will find in daily newspapers. Read everything you can if your goal is to be successful and an active investor. Remember, knowledge is power, once again. The more active you are in directing your own investments, the more informed you need to be. And the financial news, newspapers, magazines, and online, is where you'll find it. Some people ask, is this all really necessary? What if I just build an investment portfolio of well-respected companies and hold them for long-term profit, you may ask? Well, you need knowledge to know which companies to buy, and you need knowledge to understand why some otherwise good companies succeed and their predecessors fail. You need to understand how stock shares are valued in the investment marketplace. Some companies that are well-respected, good investments today may not be good investments in 5, 10, or 20 years. They may not be a good investment next year. Economic and technological developments change the reality which companies operate and compete. You need to stay abreast of these changes and how the companies in your portfolio are adapting to that change. Almost inevitably, some companies in your portfolio of investments will do well and others will not. To stay properly diversified, you need to monitor and rebalance your portfolio with these realities in mind. How you accomplish this and how frequently you do these things is all part of your investment plan. Some folks are just not interested in the stock market. If that's you, you might as well invest through mutual funds that is overseen by professional fund managers. Staying on top of the latest developments does not necessitate a big-time investment. Plan on at least 30 minutes per day for the daily newspaper and an hour or more on the weekend with online sources and the Sunday newspaper, and an hour for one of the magazines. If you do that with discipline, you'll be well informed, and just as well informed as any other private investor, and more so than 99% of them. When you read the financial news, you're on the lookout for 4 categories of information. First is an understanding of major news developments and overall events that are impacting the business community. Scan the paper for general business news, news about specific companies that may be of interest to you, news about takeovers and mergers, news about the United States economy, news about the world economy as a whole, and news about any news issues of stock in industries that interest you. Second is company statistics. By this we mean specific data such as daily share prices, trading volume, performance of broad indices, for example the Dow Jones Industrial Average and the S&P 500, and commodity prices, though these last two merit specialized videos of their own. The best source of these data is online. It's easy and readily available at sites such as Yahoo Finance. The third step is your analysis. This requires you doing your own analysis of analyzing the company statistics we just discussed. We will help you learn how to approach this task. With time and practice, your analysis can be as accurate and savvy as anyone else's. Good analysis includes the following: analysis and understanding the market as a whole, analysis of individual companies, analysis of individual segments of the industry, and analysis of government economic and fiscal policies. You will read or hear speculation. Be cautious. It is extremely difficult to know the validity of the speculative commentary you read or hear from others. Do your own analysis. These videos will show you how and where you can find this information and how to interpret it. So, let us examine this in greater detail. Let's begin with business news. Newspapers report news involving business and companies each day. Be aware that most of the company-specific news is generated by public firms working for the company itself. These PR firms distribute press releases or interact directly with the press to brief them on happenings relevant to their client company. That's why you may have noticed that the same news appears regardless of which newspaper you read. Sometimes these news stories are about a development such as the signing of a big contract, a joint venture between two companies, perhaps a takeover or a rumor of one by one company of another company, and sometimes it's about a company closing a factory or selling off a part of their company. Frequently, the news is reporting their quarterly profit or other general information about how the company is doing. These are but a few examples of the sort of business news that is reported. You will see more news coverage on large companies than that on small companies. If you're following a small company, seek out newsletters or special magazines that report on a particular industry. In general, large companies are reported much more widely than small companies. This is somewhat of a rule of thumb. For small company news, look to the specialist magazines and newsletters, which focus their attention on that specific company's industry segment. You will read a lot more about small mining in a company publication dedicated to the mining industry than you will read about that company in the mainstream general press. To illustrate, here are just a few examples of magazines that are focused on a particular industry and the developments and the companies within it. Progressive Farmer, U.S. Banker, Construct Tech Residential, Aviation Week and Space Technology. As you read business news, keep this in your mind. Is the news favorable or unfavorable? And how does this news impact my investments or investment plan? Deciding if a particular news event is good or bad is not always obvious. For example, let's say that you own fast food stock, and you read that they've reported a 3% decline in sales during the latest 3-month quarter. Sounds like bad news, right? Well, it depends. All news is relative. It depends how your company did relative to its competitors. What if the other companies competing with your company experienced a 10% drop in sales? Now, that 3% decline actually looks good. Again, what matters is the comparison, not the absolute performance. So always understand how your company stacks up with its competitors and how it's doing relative to the industry group overall. Consider this example. The large diversified company whose stock you own announces they're selling off a segment of their business. Perhaps it's one of their sideline businesses so they can reinvest and focus their resources on a more core part of their business. Yes, that will impact many of their employees and may reduce their sales and profits in the short term. Obviously, their management and board of directors thinks this is a good idea. Was this a good decision? Are they correct in focusing on their core business and selling off a subsidiary? That's hard to know, especially from the outside looking in. You're not well positioned to evaluate this business without intimate knowledge of the industry and the players within it. In cases like this, look to the experts. Again, do your research. Investigate the options and the opinions of those who would rather or should better be informed than you. Which brings us to the second thing you want to keep in mind as you review the financial news. Carefully ascertain in what manner this may impact my investment's business and the current share price. What certainly seems like good news does not always result in the share price rising. And conversely, negative news does not always translate to a share price decline. The key is expectations. What was the market expecting? Let's say the market was anticipating good news. That news may already be reflected in the share price even before the news was released. If that's the case, there will be little, if any, change in the share price. However, if the market was not anticipating good news, or if the news is better than expected, then you would expect to see a rise in the share price even still. Just be aware that the market professionals often respond faster to news than you are able, and you may have missed the opportunity to capitalize on this unexpectedly good news. Another way expectations can trip you up is if the good news is not as good as anticipated. Going back to the example we discussed earlier, if that fast food company you own reports an increase of say 5%, and even if that increase is considerably better than its competitors, the professional market analysts may have been expecting a higher increase than 5%. This is a disappointing surprise, a lower than expected increase. Then your fast food company, who's doing very well even relative to its competitors, disappointed market analysts' expectations. When this happens, the share price will almost always drop. However, this sort of decline is usually short-term, since it is a separate, temporary reaction to the company having underdelivered on expectations. This temporary decline is often a buying opportunity for investments like yourself. The lesson to be learned here is, always think comparatively. News compared to other competitors and news compared to market expectations. You need to do your best to be educated about both in advance of the news being released. Now, let's turn our discussion to share prices in the newspapers. You need not check share prices every day, but many investors do. Share prices and other company-related information is available in newspapers, on some television shows such as those on CNBC, and many other websites. The data you want is most readily available online. An excellent one is Yahoo Finance, like mentioned earlier. They provide a wealth of timely information on most every stock that is traded. Their web address is www.finance.yahoo.com. Check it out, or you can access it via any of the search engines like Google or Bing. At the Yahoo Finance page, enter the stock symbol in the search box at the top left of the page. If you don't know the stock symbol, just type the company name into the box and it will help you locate the appropriate stock symbol. The resulting page provides a wealth of information on that stock. Yahoo Finance presents it in this order: the previous closing price, the opening price at that day's trading. Now don't be surprised if they're different. The bid and ask prices, the range of prices for that share during that trading day, the range of prices for the preceding 52 weeks, that is the preceding year, the volume of trading in that share for that day, the average day volume of trading in that stock, the market capitalization, the price-earnings ratio, that is P/E, and the dividends paid, and hence its yield. The market capitalization is the total value of shares of the community. This is computed by multiplying the number of shares issued times the share price. Market capitalization shows this value usually in billions of dollars. The price-to-earnings ratio, the P/E, is a commonly used ratio and is calculated by dividing the current share price by that company's earnings per share in the most recent trading year. Below the price-to-earnings is the dividend and yield. Dividend is the pre-tax percentage return on the share price. It is calculated by dividing the gross dividend by the current share price. The higher the dividend yield, the more income return you will receive for your investment. As you become more familiar with these ratios, you'll notice that the dividend yield and price-to-earnings ratios move in opposite directions. That is, as the share price increases, the dividend yield declines, but the price-to-earnings ratio does increase. We've just discussed how financial newspapers and websites present raw data on stock share price and related statistical data. Equally important is the commentary it provides on companies and markets, which explains some insight into why prices have moved as they did. Virtually all daily newspapers provide some sort of financial news, like I've mentioned, and stock prices from the previous day. An exception is Monday, since Friday's stock prices are typically reported in Saturday's newspaper. Your reading will illustrate the broad range of factors that impact share prices. Some of the factors that impact share prices are news and performance results about individual companies, how broker and market analysts are reacting and adjusting their forecasts, the feelings and sentiment that the market expresses towards a company and its industry, competitive developments, result and announcements, competitive expectations among market analysts, the performance of the market overall, takeover rumors, and international economic news and exchange rates. Read the financial section of the newspaper regularly, if you will quickly build up an understanding of how the professionals view and value companies and their share prices. Also, look to the left-hand column of the Yahoo Finance page on any stock, and you'll see links to such things as headlines, publicity releases, and other stock relevant to that stock. You'll soon learn when and how to anticipate company results and movement in share prices. Companies report results quarterly, interim results for the first 3, 6, and 9 months of their financial year, and preliminary results for the entire financial year. These appear in detail in the company's annual report, which you should digest, including the footnotes that often reveal information not discussed elsewhere. As an investor, you should prepare for company results before they are announced. For each stock in your portfolio, and for others you are watching, you need to know what date the results are announced. That is the date you must anticipate and plan how you'll respond to the news. Usually, companies publish their results within 3 months of their financial year end, but some produce the figures more quickly than others. The easiest way to find out is to visit a website like Yahoo Finance at Next Earnings Date on the page for your stock. A question often asked is, why companies report their earnings at different times? As individuals, we are all required to file our taxes with the IRS at the same time. Companies, however, have the benefit of determining when their fiscal year shall begin and end. They cannot, however, change it from year to year. They are required to submit quarterly reports to their Security and Exchange Commissions. Now this is denoted by the letters SEC. Keep an eye open for those. So why do companies choose different fiscal year end periods? It's usually because their industries fluctuate at various times. Companies can minimize the seasonal effect inherent in their industry by adjusting the timing of their earning reports. For example, a company whose business is highly seasonal will strive to report its earnings just after that high seasonal period rather than prior to that, which would show inflated inventories in anticipation of the seasonal sales but would not show the related sales. Doing that would depress earnings by reflecting the investment in inventory but not the sales revenue anticipated for that inventory. By adjusting their fiscal year to their business cycle, they can more accurately reflect their true health. Remember, you must strive to understand what the market expects. Every company has one or more analysts from a broker or research house following its stock and trying to anticipate its sales and profit performance. The analysts research the industry, look at the company's products and services, its margins, its client base, the result its competitors have produced, and use these factors to estimate the company's pre-tax profits and earnings per share for the coming year. From this, they will usually issue a buy, sell, or hold rating and state the price at which they think the shares represent good value. Usually, the broker's research is only available to clients of that brokerage house. The rest of us have to rely on second-hand summaries. For example, you can get some limited insight into brokers' research by clicking on the links in the Analyst Coverage section on the left side of Yahoo Finance. Remember, you are doing your own research and analysis. Do it thoroughly and carefully, and your conclusions can be as good as any other investor's. This concludes this part of the video on obtaining information and reading the financial page. I realize I say this all the time, but feel free to stop these videos, feel free to rewind them. We want you to be taking notes. We realize this video, this content, it's a lot. It's not meant to be or designed to be absorbed all at once in one sitting. It's vital that you do understand this stuff. We want your success just as much as you do. Good luck.